Welcome to Money Markets, a show where we look at life in Jamaica from a financial planning and investing perspective. My name is Denise Williams, and we're here at the Jamaica Stock Exchange in the vibrant downtown Kingston capital. Our first guest is Earl Jarrett, head of one of Jamaica's oldest financial institutions, Jamaica National Building Society. Welcome, Mr. Jarrett.
Thank you for having me.
Thank you for being here. So, financial planning and investing should be a holistic approach. We should look at not just healthcare, but our investing, our real estate, our children. And although you are known as the head of Jamaica National Building Society, you're also the chairman of the Jamaica Cancer Society and the patron for the Best Care Children's Home for the Disabled. Now in Jamaica, we have a very high rate of prostate cancer among our men. And among women, the detection of breast and cervical cancer happens at a very late stage. So the question is it the cost of preventative care? Is it the cost of care in general, from a medical perspective, why Jamaicans are not planning financially for this event?
Well, many persons don't think about the financial aspects of healthcare until you're sick. But we need to remember that we need to anticipate that we could have healthcare issues, and we need to begin to start saving or to take out insurance to cover the cost of any unforeseen illness that will come down the road. For us here in Jamaica, it's all about, I think, knowledge. What I have found in my many years of volunteer work in the country is that if people are informed, people will make informed decisions. And for many Jamaicans, they're just not informed until you run straight into a health issue and you have to deal with it. And so what we've been doing at the Cancer Society is to encourage persons to be detected early for any form of cancer. Yes, indeed, we do have a high rate of prostate cancer. It's so among persons of African descent, African-descended men in particular, have higher rates of prostate cancer. And unfortunately, we're seeing an increasing number of women with breast cancer, and for many years we have experienced high rates of cervical and ovarian cancers. And so what we need to do is to test early, because testing early is actually a financially sensible thing to do.
Now, moving from cancer to disabilities, given your experience, how would you recommend parents of children with special needs, children who are disabled, how would they plan for them financially? And if you're a homeowner, are Jamaicans on average using that asset to its best and fullest extent?
So these children are going to require special care for a very long time. And in fact, even if we were to pass on before those kids, we have to think about how those children are going to be supported in the years to come. And therefore, you're going to need a special financial plan for that. You're going to need a special financial plan which requires you to save, which requires you to consider how you leave your assets afterwards, your house, how you provide liquidity from that house to support this child for the rest of its life. And therefore, persons with disabled children, they'll need to carefully think about how they're going to look after the special needs of those children over a very, very long term. It's a really challenging process, but one that we must go through.
Now, returning to your substantive role as the General Manager of Jamaica National Building Society, I would like to touch on the topic of housing finance. Now, culturally, we want to pay off our mortgage, put that title away, and never touch it again. But is that the best use of our most valuable asset? What would you say to someone in Jamaica who just wants to put away their title and never touch it again?
Well, that's a reality. What you have just described is a reality of most Jamaicans. Most of us, when we look in our historical rearview mirror, we see a history of not owning homes and coming from fairly humble beginnings. And so person's first goal is to get a house, pay off the loan, put out the title, because there's a fear that if you have a debt on the house, there's a risk of losing it. And many persons lose the opportunity to leverage that house to expand into either business or to support their children's education or other things. So you'll have individuals who will do as you said, and then run up high credit card debts and are paying, over 40% per year on these credit card debts. These credit card debts are sometimes trying to support their family's objectives. Yet, a mortgage will run you at today as low as 9.29%. And therefore, the job is to educate persons as to the balance, the advantages of how you finance your home using short-term debt versus long-term debt, how you finance your kids' education. These are things that are important if we have a program of financial education. Many years ago when I was a child, we used to have something in Jamaica called the National Savings Day, and we used to have a National Savings Month. And the objective then was that we were teaching the population about the benefits of savings, understanding money, how you set your money aside, how you create for yourself a map, a roadmap, a financial roadmap, which takes you from the birth straight through to the grave.
Welcome to the strategy session of Money Markets, a program where we look at life in Jamaica from a personal finance and investing perspective. My name is Denise Williams, and we're here in the boardroom of the Jamaica Stock Exchange. So we're in a low interest rate regime. Never in Jamaica's history have we seen interest rates as low as 1%. So what we want to talk about with our distinguished panel is what is happening in the Jamaican real estate market, the bond market, the stock market, and for entrepreneurs. Is low interest rates causing the economy to boom, or is it that savers are getting nothing, so they're hiding their money under their mattress?
In terms of this drastic reduction in interest rates, would have obviously started with the JDX in 2010.
And what's JDX?
The Jamaica Debt Exchange, which basically was a situation where the government of Jamaica had a significant amount of debt. Well, they still do, but in terms of the cost of that particular, stock of debt that they had, especially that which was held by locals, the cost was extremely high. We had instances of interest rates in excess of 25% in some instances. So what the government of Jamaica had to do, what they sought to do, is that they sought to have dialogue with the major holders of the debt to seek to negotiate a situation where they could extend the maturity on these securities while reducing the interest rate. So that would have been the JDX, which happened in 2010.
This to me is one of the biggest spin-offs, or one of the best spin-offs of this low interest rate environment. Because in the past, companies found it difficult to raise monies outside of a bank loan. So they go to the bank and they will get a loan, and the rates is something that they have always complained about, that the rates are made too high. Now they have the opportunity to go to the market and raise money cheaply. They are raising monies in single digits now. Mm-hmm. Can you imagine that? For most people who know about Jamaica,
right,
you would remember high 20s, 30s, even 40s.
Your pension funds, naturally, like most funds, would have seen a significant reduction. However, the important thing is pension funds are usually for the long term. So pension fund managers are actually redirecting their strategies to ensure that at the end of the day, our pensioners are not disadvantaged by what is happening.
With a low interest rate regime, as it is now, you can buy your house. So what is happening now is that 5 years ago, you were borrowed at like 18% for a mortgage. Now it's down to 9.25%, 9.29%.
And real estate has traditionally done well in Jamaica. On average, we are seeing price valuation going up by 5 to 10% year over year. It's an excellent hedge against inflation. It's an excellent hedge against foreign exchange risk. And anybody who bought a house in Jamaica 5 or 6 years ago, the price more or less have doubled. And traditionally, real estate values increase over time.
Does it matter where I buy? Because can I buy anywhere and my money double in 5 years?
Well, the three major things in real estate, I'm sure more folks know, is location. And you've seen it. Even when the major developments happen in Portmore, properties went up by 200% over 5 or 10 years. Montego Bay developments are happening, Ocho Rios in and out, because there are developments on Ocho Rios, Falmouth, Negril.
So the strategy for our part is to say, listen, you can acquire real estate assets now at 9.5%. Why not? Mm-hmm. This is a good opportunity for you to diversify your portfolio of assets. And you must make use of the opportunity that arises. I don't think it's a good thing to waste a crisis.
Welcome back to Money Markets. We're here in the trading room of the Jamaica Stock Exchange. In this segment, Trading Desk, we have Kevin Richards of Sterling Asset Management, who will talk about the stocks he likes. But Dolores Jones of JN Fund Managers also has assets that she likes. So, which asset will you like? The experts are going to face off. Stay tuned.
I know that these year to date there are a lot of stocks that have outperformed the market, but in economies where there continues to be uncertainty, I like to stick to the true blue that have stood the test of time. And the stock that I like currently is BNS, Bank of Nova Scotia. At this moment, I'm standing for Jamaica. And even though there are assets outside of Jamaica that are performing well, I want to see Jamaica grow. Even though Scotia is partially owned by a Canadian firm, Scotia is in Jamaica now and is helping the country to grow. Scotiabank has been performing well despite the challenges. We have seen where their subsidiary Scotiabank, for example, is growing and is playing a significant role in the profits of the company. So I want to stand for Jamaica, and I'm standing for Scotia at this time.
I'm a little different. I like hard currency investments, and I like bonds especially. And one of the bonds that I like is Genworth Financial, and that's a subsidiary of Genworth Life, which is one of the largest insurance companies in the world. And Genworth Financial is primarily involved in the wealth management business. They do sell some insurance products. And in a time like now, people are always going to be concerned about financial safety. We've gone through the recession, and people have gone through many different sort of upheavals in the markets, and people have lost money. So people are going to focus on safety of their investments, and they're going to stick with institutions that have strong balance sheets, institutions that have been around for a very long time, and that's one of the reasons why I like Genworth Life.
Welcome back to the Trading Desk. Here at Money Markets, we are all about investing in personal finance from a Jamaican perspective. And we're still with Kevin Richards from Sterling Asset Management, but this time he's going to defend his asset pick against Denise Marshall Miller, my namesake, from Victoria Mutual Wealth Management.
Thank you for having me, Denise. So the asset I love is bonds. Call me the bonds queen. I love bonds. I think bonds can do a lot for you. Well, as investors, you know you want to have some level of certainty when you invest. With a bond, you can be sure that on the 24th of X month, twice for the year, you will be receiving a coupon payment. That is interest coming into you. So you can plan accordingly. Also, you have that upsize in having a capital appreciation when you invest in bonds. And that in itself gives you an excellent return. Because when you're deciding to invest in bonds, you really want to look at the liquidity and how active you're able to get in and out of that position. Now, when you look at the Government of Jamaica bonds, particularly the JAMA 19s, the size of that offer is in excess of 400 million. It has been included in the emerging market index bond, which when a bond makes it to that index, it shows how liquid it is. So you can invest in a Government of Jamaica bond that is liquid. And of course, the bond, the options that are out there for bonds are unlimited. I'm just speaking to the Government of Jamaica that persons can relate to. Persons who are Jamaicans might feel a sense of loyalty, a contribution to their country, and look to invest in a Government of Jamaica bond.
Thanks for tuning in to Money Markets, where we look at Jamaican life from a financial planning and business perspective. In this segment, we're asking a question that's on the top of all of our minds. Is my money safe? Now, we're not talking about if you pick an asset, will your money go down or go up? No, we're talking about how are Jamaican financial institutions regulated? Are you just handing over your money to somebody, or is there a group of individuals who oversee the ins and outs of the financial institution? Where are we in Jamaica in terms of the regulatory environment? So are Jamaicans pulling their money out of the banks, putting it in the safe, putting it under the mattress because they don't trust the financial institutions? What's going on? Nielsen, we'll start with you.
Generally, there's always risks involved in any investment type that you might take. And to that extent, that's the extent of safety that you need to look at. But generally speaking, the strength of the Jamaican financial system, I think, is very good.
Devin, who do you report to?
So we report to the Financial Services Commission, the FSC for short, and the regulation that they provide to us is at the highest level we've ever seen. With respect to them, and we welcome it, right? Because we want to present that level of confidence to our clients. Because there was a time in the past when you had a lot of financial entities which were not regulated, and what we have found out now is that they were not acting properly, and as such a lot of people lost money as a result of that. So what we want is to have the regulation at the highest level at all times, so that everybody in the industry that provides financial advice is actually licensed, and the entity is probably regulated by the Financial Services Commission.
Dolores, over to you. What does that mean on a day-to-day basis? What does your institution have to do to be compliant with the regulators?
So the meltdowns that happened have served us well in terms of education. So we as a country have learned from it, and it has helped us to strengthen our regulatory framework. So institution like the one I work now, we not only have to report monthly, but we actually have to report daily, weekly, and actually monthly. And it's good for the business because the regulator is there to see what is happening, and they can at all time assess the health of an organization. So even though it is tedious, we as an institution, we welcome that, and likewise our clients.
Welcome back. This segment of Money Markets is all about dissecting a company or group of companies to understand why they're special. What makes these companies in Jamaica stand out from the rest? And to make the call, we have Nielsen Rose, Business Development. And to make the call, we have Nielsen Rose.
Go ahead.
All right. And to make the call, we have Nielsen Rose, Business Development Manager at Burlington Investment. Nielsen, what's your call?
Hi, Denise.
Hi.
Well, before I actually make the call, I just want to give you a look at Jamaica's current environment.
All right.
An environment of high inflation, exchange rate instability, and one of the lowest interest rates we've seen in our history for a long time. So again, in this environment, what do we think are the best options, and where do we want to go? We want to look not just for tomorrow or for next week. We want to look at investing long term.
But hold on, the dollar is moving. Why should I even bother to look at companies? Because it's soon locked down.
And I'll tell you why. Because if you don't, we assume you will be living through that long term. And if you live through that long term, you're going to need income somewhere down the road. There are investment objectives that you have down the road. The need to buy a house, the need to retire, the need to do many things. Children has to go to college. All of these are long-term objectives that has to be taken care of. They won't go away because the dollar is running.
Okay.
So what we want to look at, good long-term prospects, proven records of returns on equity. That helps you to beat out inflation. So we want to look at future stars. What will work for us down the road? I've chosen at least 3 Jamaican companies. They're pretty diversified in your revenue streams, give you good opportunities, and they ensure good profitability. More importantly, many say the Jamaican economy is weak. So what we want to look at companies that are diversifying their revenue streams outside of Jamaica. Grace Kennedy is one of Jamaica's largest conglomerates. They are into food, that's one of the main areas, finance, insurance, remittance business. They're in almost every aspect of Jamaican life.
Yeah, but all I know is Grace Ketchup.
Really?
Yeah.
So you've never gotten remittances from abroad to?
Yeah, I have an aunt in Atlanta that sends me $200 a month.
Grace Kennedy is into remittances.
Alright.
And if you ever have to go to the bank or investment, they're into that kind of business too. So they're well spread throughout the Jamaican experience.
Okay.
And I want to show you, Grace Kennedy has been able to grow profit. Let's look at 2008 from about 1.7 million to 3.8 billion.
Billion?
Yes.
Billion Jamaican. With a B?
Billion with a B.
Wow. Alright.
But let me take you to another Jamaican company that is also doing well. I want to take you to Jamaica Brothers, makers of the Best Just Chicken, Hypro, and other brands. They've also, unlike Grace Kennedy, where we've seen a steady increase in their profit line, they've had a little bit of volatility, but what you're looking at is growth from 08 through to 2010. Fell off back a little bit at 2011, but it still is way above 08.
You're saying to me this company has made almost $1 billion selling chicken?
Selling chicken, fish, chicken feed, and all agricultural products.
Jamaicans eat chicken that they are able to, chicken and rice and peas.
There you go, Denise. What else do we eat on a Sunday? That's what you look at. It is what we consume. It is the things that we do at the core, at the heart of it. That's where these companies are. So they also have been growing revenues and growing earnings. The stock has shown a little bit of volatility here again, but that's what...
Stop. Nielsen, I keep interrupting you, but these are important. Are you saying to me, if I had bought the stock in 1994, when I was like 3 years old, right? We could have... It was $1 or less than $1.
Yes.
And now it has clipped up.
As a matter of
fact, it went as high as $7.
So it shows you as way back as 09, 2010 how much
in the
money
middle
you
of
could
a
have made.
recession.
As a matter of fact, you could have sold it. You could have sold the stock in 2008 at around about $6, bought it back, let's say a little about $3, and by 2011 you would have been back at $7. But that's what you look for in the stock market.
That's higgling. That's not investing. That's higgling.
Investing, and Denise, if we were to go back again to the numbers we showed you earlier,
go back.
So if you were to go back, you saw the very same thing happening here, where the profits increase, fell off, and then is now on the way back up. And so when you look at how the stock prices move, it has moved accordingly, and that's the volatility that you're looking for over the long term. When you're talking about the stock market, that's what it offers. The last one I want to take you to is Supreme Ventures.
Cash pot.
There you go. You know how Jamaicans love to gamble. Supreme Ventures, SVL.
Yes.
This company has grown its profits. Talking about in 2009, 2.9.
Nielsen, when I look at
when you come all the way to 2012, Denise,
that's $4 billion.
That's the kind of growth.
No,
That's the kind of growth that you're looking at, Denise.
Look at the growth. That's more than, it was significantly more than inflation.
It is. And that's what stock market
no,
is
but
all
hold on.
about.
Let's stop right here, please. You know what else you're showing me? We gamble more than we eat chicken.
Well, there are many of us who do. Because there are many people who, in order to go and buy the chicken,
yes,
spends.
But that's like in Jamaica. So you're saying that what we say, we put pot on fire.
Yeah.
So you gamble, make a little money, and go and buy chicken and Grace Ketchup. And we're back with our roundup segment. We're asking our guests to just give their opinion on the year 2013 to date and the look ahead for 2014. I'm Denise Williams, and we're still here at the Jamaica Stock Exchange boardroom.
2013 was a mixed year. When we started, we were not as optimistic as we are now. The signing of the IMF deal is really assisted in putting the country on the right. What we will need to do now is to ensure that the plans that are in place are fast forwarded going into 2014.
All right, Devin.
So I agree with Dolores that it was kind of mixed because we spent, I think, the first 4 months of the year talking about how we're going to get this IMF deal done. After we got it done, we thought it was a big smooth sailing, but then came the Federal Reserve Bank of the US starting to talk about things like tapering their purchases of bonds in the market, which created a negative impact on the emerging market economies because if you also know that interest rates would start going up. That has kind of abated a little bit since September when they said pretty much they're unlikely to taper for the rest of this year. So I'm a little bit optimistic now from where we are because the other thing that is on our side is that our government seems more committed now than at any time in the past to sticking with the requirements of the IMF deal. So that gives me some confidence, and I think the more of that they do, it will give the rest of the marketplace that confidence, and I think we will kind of get a benefit of that and we can push forward.
Nielsen.
It's been an interesting year, as other panelists said before. Started off not very great. So there was a matter of the IMF agreement initially. Once that was out of the way, people felt good about it.
But what about the man on the street, Roy? As the average Jamaican was 2013, we're in October. Are they happy?
Well, I mean, without a doubt, 2013 has been a challenging year to date when you take into consideration all the things that have occurred with the devaluation of the dollar and the pass-through effects on inflation and so on and so forth. However, there are a couple of things that I would like to look forward to as opposed to dwelling on what the challenges have been. A couple of things that I want to look forward to is the fact that we've just signed a deal to have additional generation capacity built to supply Jamaica at a much lower cost than what we currently enjoy. That should help every single individual in Jamaica, not only at the individual level but also businesses, especially in the manufacturing sector.
Alright, so I want to throw out the real estate. Go ahead.
Not even just real estate. What I'd love to see continue is where our lending rates are, where the interest rates are in relation to what persons can borrow at between our consumer loan and also our business banking loan, because the lending now to entrepreneurs is actually the rates are much lower in the mid to low teens. So that would also help stimulate the economy as well.
Economies, whether they're on the up or down, continue to have opportunities, and it's really about understanding your market first and foremost in a premier way. Secondly, in your understanding of your market, fine-tuning your business model, and thirdly, running a lean operation. There's just no room for fat these days. You have to keep your finger on the pulse of your business, which is your cash, and think big but act small. Internationalize, move towards contributing to building the economic success which we agree that we all want.